Thank you. Remember Christine Home. Right. Check those markets, please. Dow's up 70, Nasdaq's down 20. Not much movement. Mark Tepper is with us. You're not a big bull, are you?
Well, let me put this in perspective. We are bullish, but we are like a Bob Barker, Drew Carey kind of investment shop. The price is right. So for us, price matters. We have to be very disciplined about what we're willing to pay for any stock we buy and or own. And that helps to build in some margin of safety along the way. Now, what I will say I'm concerned about is that over the course of the last few days, investors have been cheering on this increased potential for a rate cut. However, the historical data shows that from the time you have that first cut over the course of the next year, the market's down about 20%. So the investors should be actually hoping that the Fed remains in this pause pattern.
Yeah, dead stable.
Yeah, just stay where you're at.
Not too hot, not too cold. You stay right there. Has Apple lost its way?
Yeah, their event yesterday was awful. I mean,
Really?
Tim Cook, he's trying to hype it up. They're rolling out an iPad that's thinner with Apple's own chip that when you add all the stuff in, it goes up to $3,000. And a pencil? I would hardly call that a Steve Jobs moment for the company. And Apple is a company that has gone from being this innovative disruptor to now being a steady Eddie executor, which is fine. And we have to respect Apple for who they are, which is a company that prints cash. They print cash. What they need to do is they need to put their ego in their back pocket. They need to take some of that cash and start to buy ideas if they're not coming up with new ideas on their own.
You've invested in a fund that invest in sports teams, right?
Yes.
Am I right in that?
Yes. So I, along with a handful of my clients, we invest in a private equity fund that owns professional sports teams.
Right.
So baseball, basketball, hockey, soccer for you.
Right.
But they don't own any NFL companies. The reason for that is the NFL has a two-leg rule. So every single owner has to be a human being. Private equity firms have not been allowed. Now, private equity firms and NFL, they are in discussion right now to allow these companies to come in and own up to 30% of these teams.
Oh, okay.
Super exciting opportunity because most of these funds are closed to new investors, but if they strike a deal with the NFL, they will reopen.
Got it. Thanks. You stay there, please. You're here for the hour. Right. Let's have a look at Lyft, please. Lauren's got the. Is it you? Yes.
Yes.
You've got Lyft, right?
Yes, I've got Lyft. Look at this go up 8.7%. Revenue grew and their loss narrowed. We're having a day, Stuart.
Well.
Thanks to cost cutting and shorter wait times. They reported a 23% increase in rides. And if you look at the one-year chart, stock's nearly doubled. Who can you thank for that? Their CEO, who's been there for about a year, came from Amazon. His name is David Risher. He's focusing on the customer, and he's focusing on cost cutting.
I want another big gaining stock, and I believe I found it, and it's called Reddit.
Up 3.5. It was actually up more earlier.
It was,
so a social media company, they reported a surge in daily active users, up 37%. First ever report card as a public company. So yes, they're popular still, but not yet profitable. That's not bothering investors today.
Anheuser Busch InBev.
Ticker symbol BUD. Difficult year for them since the Dylan Mulvaney transgender Bud Light controversy a year ago. That appears to be ending, if not over. Worldwide revenue grew 2.6%, although it is still down in the U.S. But some of their other brands are performing better. Stocks up 4.3%.
Nice gain there, 4%. Good. Thanks very much, Lauren.